Welcome to this explainer. Today, we're diving straight into Ontario's real estate title system and navigating that fascinating and honestly sometimes confusing space between government guarantees and real-world property risks. You know, title insurance is one of those things that usually shows up as a single line item on a closing statement, sandwiched right between the registration fee and the courier charge. Almost nobody reads past the number. But once we pull back the curtain, it's actually a complex, layered system designed to protect one of the biggest purchases you'll ever make. Before we get too deep, just a quick note right up front. This explainer is strictly for educational purposes. Olanier is an AI lawyer matching platform, so it doesn't provide legal guides or advice. We're just here to look at the data, break down the facts, and help make sense of the landscape so you can feel a bit more informed.
Okay, let's look at our roadmap for today. We'll be covering the real estate title puzzle, Ontario's built-in title guarantee, the title insurance gap, owner versus lender policies, navigating specific title problems, and finally, why insurance cannot replace lawyers.
Section 1. The real estate title puzzle, moving beyond the closing statement. When you spot title insurance on your closing paperwork, your immediate thought is probably just about the cost, right? But it represents a much more significant mechanism than just a simple administrative fee. By definition, title insurance in Ontario is an optional, single-premium property insurance policy designed to cover specific defects or failures in a property's title. You pay the premium once at closing, and it generally runs for as long as you own the home. Now, it isn't strictly required by law. Cash buyers can technically decline it, but many buyers find it to be a highly helpful tool because it acts as a bridge. It bridges the gap between the promises the province makes regarding your title and what actually gets paid out if something unexpected surfaces. Section 2. Ontario's built-in title guarantee, also known as the Land Titles Assurance Fund. Since Ontario runs a land title system, the province essentially stands behind what it says on the register. If the register is wrong, the province answers for it. The mechanism for this is the Land Titles Assurance Fund. Over a 25-year period stretching from 1993 to 2017, this fund paid out a total of $13.4 million across the entirety of Ontario.
Now, what's really interesting here is the math behind that total. Break that $13.4 million down, and it comes to an average of just $534,819 a year across the entire province. To put that in perspective, the average price of a single home in Ontario back in July of 2026 was nearly $800,000. So the fund's average yearly payout for all of Ontario is literally less than the price of one single average house.
So why is that number so relatively low? Well, it comes down to how the fund actually operates. The guarantee is very real, but it has some distinct boundaries. It's designed to pay last, meaning you generally have to sue the responsible party first. In cases of fraud, they're going to ask if you exercise strict due diligence. It enforces a strict 6-year deadline to file. It only covers actual financial loss, not distress, and importantly, it can move incredibly slowly. For example, in the province's own R&J investment decision, a mortgage was fraudulently discharged in 1990, but compensation wasn't finally settled until 2008. Yep, that is an 18-year wait. It is truly a mechanism of last resort.
Section 3. The title insurance gap, exploring where the province stops.
So exactly where does the province's built-in coverage end, and where does a private policy step in to do the heavy lifting? Nothing illustrates this better than the 2005 Silberlin decision. A buyer discovered their property was missing a vital right-of-way that was mistakenly listed on the register, and it cost them almost $130,000 to fix it. Their private title insurer paid the claim, making the buyer whole. But when the insurer turned around and asked the provincial fund for reimbursement due to the registry error, the province flat-out refused. The core takeaway? The fund is a last resort. An insurer has to exhaust its own policy first. The province even updated the law the very next year just to ensure insurers cannot pass the bill back to the province. The policy is literally what stood between a massive expense and the buyer's own bank account.
Another major gap involves a term called LTCQ, or Land Titles Conversion Qualified. When Ontario automated its land registry, they converted parcels administratively. This means they just pulled the data over without doing new surveys. So LTCQ acts like a frozen snapshot in time. Imagine a neighbor's fence was sitting 2 feet over your property line before the system converted. Well, the provincial guarantee simply will not cover it. That pre-existing boundary risk is left entirely out of the province's promise.
Section 4. Owner versus lender policies. Understanding exactly who gets indemnified.
This is a super common area of confusion at the closing table, figuring out who actually benefits from the insurance you're buying. An owner's policy indemnifies you, the buyer, and lasts for as long as you own the home.
A lender's policy, on the other hand, indemnifies the bank or mortgage provider and only protects their security in the property. Say an old lien from a previous owner suddenly surfaces and threatens the property. A lender's policy makes the bank whole. The bank walks away satisfied, but guess what? That lien is still attached to your house. A lender's policy does not clear the problem off your title. That is where the owner's policy comes in, answering directly to you.
Section 5. Navigating specific title problems. Finding out who answers when things go wrong. Let's apply these ideas to some specific problems to see who actually answers the call. If a mistake is made inside the land registry office, Ontario's guarantee reaches it, and so does the owner's policy. But what about post-purchase fraud, like someone forging a mortgage on your home after you move in? The province only sometimes answers, and it's slow, whereas an owner's policy is specifically designed to reach it, often covering the legal costs to restore your title. Now look at boundary encroachments, like that fence we talked about. Because of that LTCQ qualifier, Ontario's guarantee doesn't answer at all. An owner's policy is often the only option that answers for boundary disputes or a previous owner's unpermitted additions.
It's also worth noting that sometimes solutions come from the legislature rather than insurance. For instance, companies used to aggressively register notices of security interest, or NOIs, for things like rented water heaters directly onto people's property titles. It became a massive headache for homeowners trying to sell. Fortunately, the Homeowner Protection Act of 2024 stepped in and automatically expired these consumer goods NOIs on Ontario titles as of June 2024. It cleared the title instantly, which was a fantastic win for consumer protection.
Section 6. Insurance cannot replace lawyers. The necessity of legal oversight. While we've spent time looking at how policies protect you, an insurance policy cannot actually register a property transfer. The crucial point here is that legal professionals do the preventative reading that insurance doesn't. You might find a lawyer's review incredibly beneficial in specific scenarios, like when the paper survey disagrees with the physical fences, navigating the complexities of estate sales, or when you spot unfamiliar items, like old easements, sitting on a parcel register. Even if you're a cash buyer who chooses to decline a policy, making that choice with the search results in front of you and a lawyer's guidance is just a really empowered way to make that decision. Plus, in Ontario, access to register most transfers of title is restricted to lawyers anyway, making their oversight an integral part of the journey.
We have covered a whole lot of ground today in this explainer, from the province's slow-moving fund to the distinct differences between lender and owner policies. So, I'll leave you with this question to think about. Are you relying on a baseline guarantee, or do you know exactly what your closing package covers? You might want to ask for your parcel register, look for that LTCQ qualifier, and have an open conversation about your coverage. It's all about making confident, informed choices for your property. Thank you so much for joining me, and I hope this helps you mind the gap in your real estate journey.